Hey everybody, this is Dan with Theta Trend. Today is Wednesday, July 9th, 2014. It's 4:30 p.m. or so here. We're Mountain Time, so about 2.5 hours after the market closed for the day. What we're looking at right now is a daily chart of SPX, and what we're going to do today is we're going to take a look at this chart and also an intraday chart, and we're going to talk about the trade for the Weekly Theta system, so the system that sells a weekly vertical spread in the SPX. So, as everybody probably knows, yesterday, Tuesday, was a little bit of a down day for the market. I think it still wasn't even down 1% or so, but it sold off a little bit after making new highs here. But the reality of this is that this is still a primary uptrend. The trend is still bullish, and it looks like price wants to either continue higher or at worst be neutral in here. We haven't seen any major support breaks, and the average true range trailing stop, which is this dotted green line, just continues to move up with the market, move up with the market. And until that's violated, I'm going to continue to be long. And a close below that level would invalidate this trade, but so far we haven't seen that, and we have a little ways to travel before we get there. And if we notice, this average true range trailing stop level is basically here at 1949. So we'll remember that when we go to look at another chart. And the moving averages, just so you know, this yellow is a 10-day simple moving average, the green is a 20, the red is a 50, and this is the 200, the gray down here. So let's hop over and take a look at the intraday chart. So what we're looking at here is a 65-minute chart of the SPX. And what's interesting to note is that we broke this support back here, and we came right back down into this area of prior resistance, and it acted as support, and that was down around 1960. So the stop level on the daily chart is basically right here, right around 1949. So if price was to trade down, and it would take a break of this 1960 level, we could probably very quickly get down to that 1950-ish level. But if we did that and closed below that, we would need to get out of the trade. It would invalidate the trade. Or if we were watching it in the last few minutes of the day and price was trading, somewhere down here, say 1943, we would need to close the trade, or it might not be a bad idea to close it unless you want to take your chances overnight. So given what we have right now, though, we're still going to assume that price is continuing higher. My personal opinion is that price looks a little bit neutral in here, but it doesn't really matter what I think. That's just an opinion. What I'm looking at is put spread to sell somewhere down here in the neighborhood, with a short strike in the neighborhood of 1925, maybe the 1920, or at best the 1915. And the reason there's a little bit of variation here is just that we don't know where the market's going to open in the morning, and so it's difficult to know what's going to be a roughly 10 delta spread or so that I can sell for a 45-cent credit, which is what I like to receive. If I could get 50 cents, that would be great, and that's on a 10-point wide spread. So if we go over to the Analyze tab, what I've done here is we're taking a look at the July options, which have 8 days to expiration, and I have up the 1920, 1910, so that was right in the middle of my 1915 to 1925 range. And I've just ticked this up one from 40 cents to 45 cents because that's the price that I'd like to receive for it. So if we go over to the risk profile and we'll select this trade, we're looking at the 1920, 1910, and price closed here at, let's call that 1973. It's a little bit under that, but 1973. So in order to get filled on that, we'd need to see an open and a trade down, probably somewhere a little bit below 1970. This is where the break-even mark is there, this little red hash mark. So, I think 3 points is a reasonable distance to travel, a reasonable distance for price to travel to get filled on this. And if we come back over to the intraday chart, 1970 is right in here. We could even see maybe a little bit more of a pullback. It would take us back to this, prior resistance. Maybe that would act as support. That's down at 1968. Should be enough to get us filled on it. If we break 1960 and head down to 1950 and look like we're going to close below there, then we're out, basically. Let's just go jump over here real fast. So if price was to immediately trade down to that 1950 level, at the time that you put on the trade, you'd be looking at a $75 loss, which slightly exceeds the risk that I want to take on the trade, but it's something you just have to watch throughout the course of the day. And the spreads come into the money so fast. We've just ticked forward 2 days. Now we're still down $60 there. So we'll just see how it all plays out. But that's what I'm looking at for tomorrow morning. Hoping to get filled sometime 8:30, 8 o'clock Mountain Time. So I guess that's 10:30, somewhere in there, Eastern Time. At any rate, I hope that helps. Have a good night. And if you have any questions, shoot me an email, info@thetatrend.com. Thanks for watching.